Hey, folks, this is a solocast. And in this solocast on DealQuest, I'm going to be talking about the impact of the potential increase in capital gains on deals. And, this has already happened. Even last year, we started feeling this coming into this year. And of course, we don't know whether capital gains rates are actually going to go up. But certainly the current administration, the Biden administration, is proposing an increase in capital gains. Whether or not that will pass Congress, especially on the Senate side, is a question. So we don't know, but we see impacts in the marketplace already. And as you are aware, this is a business podcast. I'm not going to be talking about the politics of it. I know this is a passionate political issue, like many things for many people, but I want to talk about the actual business impact in the past, going forward, and then right now and going forward. So what are we talking about here? First of all right, and I think I've mentioned this in a prior podcast already, even the possibility, so, in November when Biden won, even the possibility at that point that capital gains rates may go up triggered a lot of deals closing before the end of last year. There was some, concern, or you can call it planning, just in case, that the people who could get deals done last year pushed to get them done last year, just in case rates went up in 2021. Now, it doesn't look like that's going to happen. Even back in 2020, most folks thought it was unlikely. But again, if you could get a deal done and not take the chance, if you were, especially, if you were a seller, let's say in an M&A deal, and the capital gains rates were going to be significantly different if you closed your deal in January versus December, well, you got your deal closed in December. And it was a very busy year in terms of M&A generally in 2020, despite the recession, or maybe because the pandemic, which triggered a recession in some industries. But as I've talked about many times in the past, in this K economy, there were industries that were doing really well, and there were a lot of deals going on in those industries, financial services and tech, for example, are two sectors that I've mentioned before. So that accelerated. We had a lot of deals going on in November, December, and then actually things have continued into this year because people have realized that it is now looking likely that if there is a increase in capital gains rates, it's likely not going to go into effect. In fact, it's almost definitely not going to go into effect until 2022. So now we have a year where people are looking to already get deals closed, or at least now are actively positioning themselves to get deals done before the end of the year. So in my experience, at least on the M&A side of things, things are, it's going to be another robust year. And that combined with the fact that, of course, the economy is opening up, with us moving into a new phase with COVID and the vaccines and things like that, and the economy overall improving and the stock market being strong and there's still being a huge amount of capital out there. There are a lot of factors that are leading to deals going forward, including, by the way, very high valuations in some industries. I was just on with a client today talking about the valuation multiples in the wealth management space. And so it's not only the risk of capital gains going up, there are other market factors that are driving deals, especially M&A and venture capital and private equity investments that are independent of tax policy. But certainly there continues to be an awareness of the potential increase in capital gains rates and the potential benefit to do a deal today, especially as a seller, if you are thinking about selling your company within the near future. Now, listen, if you're five years, out, for example, from doing a transaction, you're not necessarily going to rush a deal to get it done today. It's just that if you were thinking about selling and, maybe it would be in a year or two, you might make sure that it's this year. And that goes to something that affects my view in general on the impact of tax rates on business decisions. They definitely have an effect, right? Whether it's, local taxes or, federal income taxes or capital gains rates. But I, unlike other people, do not believe, especially in the entrepreneurial community, which is where I spend a lot of time, right? In the smaller middle market, let's say, the million, 2 million, 5 million, 10 million, up to 50, 100, $150 million. I'm not talking about $1 billion plus companies, But, in that range, let's say a couple hundred million and lower, and certainly in the range of the, few million up to 25, 30 million, 40 million, where we do a lot of stuff. The primary driver of business decisions, in my mind, in my experience in dealing with people, is not tax policy, right? It's other business realities of a situation, whether it makes strategic sense, to do some sort of deal. And listen, even, in the bigger scenarios, when you're looking at the strategic reasons to acquire a company or sell a company or merge, those factors are going to be there no matter what the tax rates are. Now, will tax rates affect deal structure? Will it affect, certain other aspects of the deal potentially? Will it affect timing if people think that maybe rates will again change? Possibly, but I don't think tax policy for most operating businesses, right? Entrepreneurial operating businesses is the primary driver of business decisions. It has an impact, not primary driver. Now, I want to make a distinction between, let's say, M&A deals, which we do a lot of, and like private equity investments. Now, some people argue that when capital gains rates go up, that there's a depression of capital available and people wanting to invest, because obviously the returns that they get on their investment, if they're taxed at a higher rate, are not as attractive. Well, if you study this, there's some question on that. There's some mixed data. If you look at some of the studies and look at the comparison of historical capital gains rates and historical investment and deal figures, they don't necessarily directly align. And I'm not saying that's because it doesn't have an impact, right? I believe it has an impact. I'm just saying that there are many other factors that impact whether people make investments or do deals or buy companies, right? There are business cycle factors. There are industry-related factors. There are, listen, if you are getting to an age where you've built a business and you want to retire, you're going to exit that business at some point if you have the opportunity to exit, monetize it, whether or not, whether capital gains rates are at 20 or 25 or 40 or 45 or whatever the percentage is. There are a multitude of factors that go into business decisions on whether it's private equity or venture capital or angel investors or friends and family make investments, and whether there are various types of M&A deals going on. Taxes are one of those factors, but if you look at historical correlations, it's not the single factor that drives the difference. So I'm not saying this to make a case that it's okay to raise capital gains rates. There's a logic in saying that will depress investment, even though the stats don't always, follow it through. I think there are certain people and times that it's going to have an effect. Obviously, it's a factor. So, how does this affect you going forward? Well, listen, if you're in a position to certainly sell your company and you're thinking about doing it and you have a short-term horizon, yeah, it may make sense to look at whether you want to accelerate that and do something this year. I certainly have many, many clients that are, seriously considering that, because although it's very possible something may not happen, what we clearly, very aware of is that rates aren't going to go, they're either going to be the same or they're going to be higher in terms of capital gains over the next year. They're certainly not going to be lower. So, you may want to consider that. As you may imagine, because of my view that it is only one factor, I don't think anybody should be panicking, right? If you're planning on running a business for the foreseeable future for a long time, right? You're not going to go run out and change your entire business strategy and suddenly sell because capital gains rates may be going up. You're going to make, strategic business decisions. So let's talk about that, right? Let's talk about investors, right? Those are the ones that are most logically adversely affected by capital gains rates, right? If we talk about mergers and acquisitions, there's so many other reasons why those kind of deals can happen, right? Why somebody might want to grow through acquisition, might want to have a strategic partner, expand, geographically, expand the certain capabilities and things like that. And if they need that to be competitive, or they need that to grow. And by the way, as you grow in most industries, as long as you maintain profitability or increase it, your multiples go up as well. So, despite the tax implications, the valuation increases in most industries when you grow, have that be an incentive. So There's all these other reasons to continue to do growth through M&A and through other strategic deals, right? And there are strategic reasons to do it. It's much more, let's put it, there's more of a direct correlation, although it's not the only factor still when you're talking about investment capital, right? Because investment capital is not, you're talking about, let's say, a VC firm, private equity firm, whatever. Their business is investing. They're not operating an ongoing business where there may be other strategic reasons to do a deal. Their whole purpose is to deploy money, get a return on it, and maximize their net return on capital, right? The net return on capital has to do with how much they put out there, the time it's been out, right? The amount they get back, and then the amount they end up keeping after taxes. So it is a much more direct benefit or impact on what capital gains rates are on investors. However, even though it is, what does that mean, right? Are investors going to suddenly stop investing? No, because again, even in that scenario, there are a million other factors that are going to, come into play. If you think you can invest in a company at a key stage, right, whether you're an early stage investor or you're, whatever stage you invest in, right, you're making an investment because at that stage you believe that you're buying in at X and you're going to get 3, 5, 10, 20, 50, 100, whatever, depending on the stage, depending on the type of investment you do, depending on how risky or safe it is. There's some multiple, some significant multiple. And when I say 3, that's usually not the numbers that, that investors are looking for, right? They're looking for, 5s, 10s, 20s, 100s times their money. Well, listen, obviously, if that is taxed at a federal capital gains rate that, is twice what it is now or 80% higher, whatever, is that going to affect the net money? Sure, it will. But is it still a bad, is it a bad deal? Is somebody not going to invest if they think they can 10 times their money just because the capital gains rates are higher? No, not necessarily, right? There's still going to be investors out there. There's still going to be people looking to deploy capital and get back multiples of that capital. Now, obviously, if they get back net less, then there's less money to reinvest, right? Because they have more in taxes. When they're evaluating deals and they're looking at the returns they need to get, they can again take into account the higher tax impact of it, and could it impact some decisions on companies that might have been sort of on the edge on sort of returns, and well, now that even if they get that return, the tax is higher, maybe they don't make that investment. Yeah, on a micro level, sure. But there'll still be capital out there for other factors, and the opportunity of a market for investors to put fuel on the fire to take a company that's on the verge or hopefully has this upside to grow significantly is still going to be the biggest factor in the investment decision. So am I advocating that it doesn't make a difference to raise capital gains rates? No, I'm not saying that at all. But I do think that there's a knee-jerk logic that says that if you raise capital gains rates, you're going to suppress investment and adversely impact the economy. And historical figures have not necessarily shown that to be true. Now, that may be in part because at times when capital gains rates were raised, they also eventually then were brought down, right? So, if there was an extended period of time where capital gains rates stayed up, maybe you would see a different result. What I am more interested in, because listen, if you want to get on one political side of this, whatever, lobby for it, do your thing. But the point is, to some extent, it's either going to happen or it's not going to happen. And when we're in business, we deal with the what is, and we don't let it, we try to minimize the way it adversely affects us, right? So, entrepreneurs are going to keep building companies. Investors are going to keep investing. And again, I'm not saying necessarily exactly at the same levels, so summary. In the short term, I think it's spurring deal growth or deal acceleration, at least. In the long term, we will see. First of all, we don't know whether it will get passed. Right now, as everybody knows, the Senate's equal, and you have Democratic senators from conservative, states like Joe Manchin and people like that may not support, a capital gains increase. And then, even if it happens, I think for most operating business owners, there are so many other factors, especially coming out of this pandemic, positive and negative, that they have to take into account, that, I think are going to impact deals. So I don't see, if capital gains go up, you suddenly get this, you're going to get this, you're going to go from a robust deal and investment market to suddenly everything dying. All right. I don't see that happening at all. I don't see, we don't have historical precedent for that. And also, frankly, there's so much money out there to be deployed. What do you think these funds are going to do? I mean, if capital gains rates go up, they're suddenly going to turn back money to all the investors and close the funds? I don't think so. Now, will over time it may become a little more difficult for them to raise new funds? Will it affect people's decisions on whether they want to put money into it or keep it on the sidelines? Especially if interest rates go up or other kind of returns go up, inflation starts happening. Those are all things that may further impact it, and when combined with the increase in capital gains rates, could make a difference in the long term. But I wouldn't panic. I guess that's really what I'm saying. I wouldn't panic. If you are in a position to get a deal done this year because you were going to plan on doing it in time, it makes sense. That's the logical business decisions. Why not de-risk that, that situation if you were a seller? Because again, like last year, it'd be crazy to close the deal, in January 2022 when you get it done before the end of 2021 and de-risk the potential increase in capital gains. Now, at some point this year, obviously, we may get a much, much clearer view on whether the capital gains rates are going to go up, and help you. But listen, if you look at a cellular company, we're in the end of, well, I'm recording this, and actually this one's going to go up pretty quickly. So I think it's going to be the end of April that this one is going out. So, we're a third into the year, right? And deals take time, depending on what size it is and, that kind of stuff, whether you, or even what stage you're at, whether you even have a potential buyer, you got to first start packaging and the company for sale. Deals can easily take 3, 6, 9, 12 months or more. So with 8 months to go in the year, if you do really say, hey, no, I'm intent on selling, you should get moving. But if that's not the case, don't panic. Be aware, obviously keep it in mind, but also look at all of the other factors that are going on in your industry that impact whether M&A deals are going to be available, what the valuations are going to be, whether there's going to be capital still available and things like that. And you'll have to make your business decisions accordingly. So those are my thoughts on capital gains. I know this could be a spirited topic. I know it's easy for people to sort of knee-jerk, just have opinions on it. I would love to hear your considered thoughts in the comments, either on social media where we post this or on my YouTube channel. And this is one that I have an opinion on, like a lot of other people. I've done some research on it, but I am certainly open to other people's input here. Mainly as it affects business folks and in terms of deals. There's a whole separate conversation on whether it is fair or not fair to tax capital gains differently than you tax ordinary income, and whether that disproportionately benefits, which it clearly does, higher wealthier people, but whether that benefit to wealthier people actually ends up benefiting the economy overall. You can get into all those discussions, and I know those could get heated. But those are for the political arguments, and you want to write your congressperson and go, be my guest. As business owners, however, we end up dealing with, if we can't lobby and try to affect the decision we want, and when the decision comes down, we end up dealing with it. And we want to be when we're making the business decisions, we want to be in the reality of the impact, not our emotion or our political opinion about it, right? Because that may be overblown compared to what would be logical business decisions that should come out of the situation. And for me, the fact that it's complex, that there are so many other factors that go into whether markets, economies, deal flow, investment capital are available, deployed, plentiful, that kind of stuff, that you should consider taxes as one of the factors, but don't forget to consider all of the other factors that impact deals, whether they're M&A, investment, or otherwise. So that's what I'm going to leave you with, folks. Capital gains and deal making. That was today's topic. Love your input on it. I know it's a hot topic right now, and we'll see whether it comes about. And we'll deal with it because that's what we do as business owners. All right, folks, have a great time. I will see you next week.